Welcome to this week's ASX edition of Trade the Trend, a weekly video discussing where the stock market is heading. This video is going to focus on the ASX 200. I'm also going to have a look at gold, so make sure you stick around for that. I discuss the S&P 500 in a separate video, and I'll leave a link for that in the description section below. As always, it's general commentary and doesn't take your personal situation into account. All right, with that said, let's get into our first chart. So we've got the ASX 200 up on the screen, and last week I spoke about the possibility of more consolidation, and that's pretty much what we've had. We've continued to see the market pull back after testing this big overhead resistance region between 7,100 and 7,200, and that's really been capping the price now for several weeks. And it's quite common for that to happen because these big resistance bands, they often at least offer some sort of create some sort of a temporary pause in the momentum of a market or a stock. And sometimes the market will turn the course of the market, but other times it's just temporary. The market consolidates beneath it and then breaks upwards. Time will tell what happens with the ASX 200, whether it can which way it goes. So I think like the S&P 500, which I was talking about in the previous video, the key point to watch here now is these Fibonacci retracement levels. So if we just put them on here for that latest upward leg we have, you can see the ASX 200 is right down in the middle of this fib region now. So this is very much where this would be a natural place for this pullback to stop, if it is going to stop, if it is in fact a pullback and then another attempt at rallying. This is sort of where you'd look for it to pull up, and would also be looking for like how the market rallies off here if it does in fact rebound. So let me just take that off the screen, and what we want to see a fairly solid rebound if we're going to keep some sort of potentially a bullish scenario on the table. You look for a strong rebound, maybe some further consolidation, and for that it starts to give the base to punch through that resistance area. So time will tell whether that's the way this market goes. It's no one can say if that's going to happen, but that's one of the scenarios which is on the table, and I think does remain a reasonable possibility. We've also had that pullback. We've also had the pullback below these moving averages, and that's something that I spoke about a couple of weeks ago. In that we often get markets, they rally, they pass the moving averages, then gravity pulls them back down, they retest. And if it's going to go towards a bullish scenario, it's then a case of consolidating and getting back above those moving averages. Similar to what we saw through, like here's an example where the market rallies above the moving averages, pulls back below them, and then we start to get a sequence that stays above those moving averages for some period of time. That's the possibility we're looking at here, but we need more price action now to see which way this goes, whether this is actually going to roll over and become more bearish, or we do have some sort of recovery underway. Whether it's lasting, we don't know, but it is possible we are going to see some sort of base fall, which could see some higher levels in the months ahead. And as you'll know, I've been talking about incrementally getting some exposure to the market over the last 6 weeks. But right here and now, I don't want to be adding any more to that exposure. I'd rather wait and see. I really want to wait and see what happens from this pullback from where we are. Either we're going to get signs that the ASX 200 is getting ready to retest this resistance, or we will see the market continue to trade lower. So it's been a time for caution throughout this whole rally, but right here and now it's a case of wait and see. It's I think it's all about keeping a tight rein on risk, because I think the the winner during these times, it's not the person who keeps coming in all the way through and keeps trying to buy the low. I think it's the person who's best at protecting their capital, and the person who then is ready to take the new opportunities when they emerge. And that will come through being closely watching the price action and seeing whether we can get this sequence of higher highs, higher lows, and in general upward momentum coming into the market. Now, I'll finish up with having a quick look at gold, because that's been interesting at the in the last few weeks. But firstly, if you're getting value from this, please hit that like button, the subscribe button if you haven't already done so, and also please leave me a short comment. Hey, thanks for the video. Something really short and simple is all I need. It just tells YouTube that people are watching, people are engaging, and then YouTube keeps showing people the video, which is the reason I make them, because people watch them and they help people get an understanding of the possibilities. So please do that. It helps me a lot. So let's jump over to gold. And what's interesting with gold is just in the last couple of weeks, we've really come down. We're really getting close to retesting this big support band. So you can see this stretches all the way back to February 2020. So it's a long-standing support. Gold tested this on multiple occasions, so it's become significant due to that number of tests that it's had, and so far it's held all those tests. And here we are now, right back down near the support. So I haven't covered gold for a while now. I haven't covered it since we were back here in May, when gold was breaking down, and said, well, okay, well, the bullish breakout we had here, it hasn't carried on, breaking down, time to step away. Interesting again to revisit it, because we are close to this support, which comes in at around 1680. So as I say, it's a big level. My feeling is that it will hold at this time, at this test of it. I think for a breakdown, I think it would need to build up a bit more momentum than it's approaching with at the moment. It's kind of inching its way towards the support. I don't think it's ready to go through, if it is to go through at all. But I think this is something to watch closely, because a breakdown here would be, I think it'd be a significant negative for gold, and it would really put I have a longer term bullish view on golds. I think looking at this on a weekly chart, I think it looks good. I think it looks constructive. But from a near-term perspective, if we were to break this support, it would put any sort of bullish outlook, I think, on well and truly on hold. It'd put it on the back burner. It'd be a negative event. So I think watch this closely, and the gold stocks just continue to look awful. Just quickly looking at one of them. Let's go down. Let's have a look at Evolution. The Evolution is down. It's down close to 70%. Over the last couple of years, and this is typical of gold stocks generally. There's nothing bullish about this chart structure, so that's a concern for gold stocks generally. I think there's going to be some terrific opportunities in this gold sector, but there's been so much technical damage done that I think it's going to take time to repair. So keep an eye on gold, but if you like gold, I think the time to buy gold stocks. It's we don't have a clear view of that by any stretch at the moment, with those downward trends just so established. So let's leave it there for this week. I hope that's been helpful. Thanks for joining me. Look forward to speaking to you again next week. Until then, bye for now.